Hi, Warriors. Hello, Forex Gal. Let's have a good week. Hope everyone had a good weekend. Had time to sign up. Promo ends today. Yep, today's the 30th. Also, with it being the 30th, something I learned from Steve Volge. I normally look for midweek, mid-month reversals, but since I met Steve and have listened to his commentary for a while, I've learned from him that you could look for reversals also at the beginning of a month. So we have the beginning of October, scary, scary month coming up. And with that happening, I'm being patient to top pick the dollar. I still think there's a pretty good chance that we could get up towards this 99.80-ish level, which probably would take euro down to 8.5 or so. We are diverging there, but euro's weaker than cable. Uh, Euro pound giving it back up after rallying a bit. So that's really something that I'm keyed on to. We had that pretty nice break in the S&Ps. Friday, I talked about selling it. We were about 288, and we got this big sell-off to the 50-day here. And this is still the line in the sand. That's 2940 level. So we'll see if we could get some type of follow-through. Do believe now that we start trading over this MA, say 287, 285, which rejected it here, that we have a shot for new highs. Okay. We start taking out this lower, see how they're compressing, lower Boley band here, right around, Friday's lows, which were, I think, what were they, 44? Okay. Coming in at 48. Then I think we'll have this test, but the jury's out. I mean, the news backdrop is pretty negative. Um, I've kind of changed my mind here in the end. I don't think that we're done, and I think we're going to fulfill this objective that we had from down here, which could take it up to the 109 level. If you just measure it from here to here, it's going to give you 109, and there's 1.618 level and kind of a third drive line up there on the weekly. So a lot of confluence, a shade under 110. So if the S&Ps can crack resistance overhead, I think that the yen has a shot to head up towards above the 109 handle, and I'll probably be looking for shorts there. Of course, we can't take out this 104.5 level. It's really not much of a, big trade. Someone on Twitter said the other day that they wish I would run for president of the United States. And I said that I had a lot of skeletons in my closet, more than you'll see on Halloween. But I accept the nomination for the FX volatility party, because I'd like to see more just like you. Gold, we finally have a little breakdown, but I always have a hard time chasing markets, especially after a big break here. So, you know, we're still holding support. Silver is weaker, starting to look like an ABC, and maybe we're eventually headed back down towards 1580. The failing rally was a trade of the week, in my view, last week. And crude keeps giving it up, and I keep waiting for a rally to sell. So I've been waiting for a rally to sell since, last week. Haven't gotten one. Still waiting. And I just want to show you something, because there was a pretty good article someone sent me about the Chinese and trade. And I know that we've nailed down some shorter term targets at 23 or so for a third drive, but I just want everyone to keep the big picture in mind. Even if the S&Ps do make a new high, that if this formation is correct on the weekly, and it's a cup and handle or a head and shoulders formation, the measurement is huge. It's like 760. And it's hard for me to be able to see a sanguine market with USD one charging towards those numbers. But right now, we'll take it a day at a time. It's starting to look like the right shoulder is getting a little stretched up here, and it's not going to be a right shoulder, but possibly a third drive up here, maybe with the dollar, both the yuan and the dollar peak here on the third drive, and that could be the jet fuel for the S&Ps and maybe trade 3080 or so. So those are some of my looks, and really important, guys, that you take advantage of this price. 35% off the annual is the best deal out there.
Last day, coach.
I know. Last
Good
day,
morning.
as they say, good morning, Steve. The window, imagine a window, and through that window is opportunity. And as the window is slowly closing, you hardly have any room to squeeze through that window anymore. You have 24 hours to play limbo through that window to become part of our trading community. So, Steve, I hope you had a good weekend.
You know, an interesting piece of mythology. You know how ancient Greeks envisioned opportunity as a woman without hair. So if you didn't grab her as she was coming, then it was too late.
Oh, okay.
That's true. It's
yeah.
Ancient mythology.
He must be making this up. He must be making this stuff up. Seriously. No, he's not.
No, come on. Didn't you ever hear that one?
Yeah, I've heard it. Yeah.
Huh? Okay, well, what if the woman has hair, but you're a hairstylist and you shave her head?
Back then, as you understand, there were no
like
women,
that.
I'm assuming.
Like that lead singer of the Eurythmics, Grace, whatever her name was. Anyway, so
Annie Lennox.
Yeah, there you go. So yeah, I'll remember that from now on, Steve. I'm not going to let any women with hair pass me up anymore. All right, I want to be lucky in more ways than one. So I hope everyone had a great September. To give yourself an edge for the rest of the year, because I think we're, with what's going on in peace.
Ziggy, I didn't say grope hair. I said grab hair.
Oh, he said grope. Yeah. All right. So hang out with us for at least 2 months. You get 2 for 1, and check it out, and I think you'll be happy. And I was sure happy to find these guys, and it's helped me in the markets. Just being able to go to, if I have some ideas or I'm not clear on anything, just to go to the dashboard, and I don't have to make a call to Blake, or I don't have to make a call to Greg, or send send them any. Huh?
Coach, sorry to interrupt, but if I may have the opportunity, there is one more thing, because there is like a mini scandal going on Twitter, like people exposing like educators for falsifying, account performance and things like that by creating, dummy servers on MetaTrader. People that are part of ForexAnalytix, they know that, having to do with our patterns in play, there is full transparency. I mean, we post online immediately everything before it happens. So, if or not, our ideas are working, everybody that's a member of the premium plan knows about it. Besides everything else, of course, that we do.
I mean, there are a lot of charlatans out there.
And I'm saying that because very well that there are a lot of people that are naive enough to believe that you can make a fortune out of like an account of $10,000 and make a living of like $3,000 per month and things like that. Those things, we've said it on the webinar as well, like, multiple times. Those things are fantasies, right? I mean,
well, you know what I say, Steve? People have asked me, Dale, can I trade for a living with 10,000? And I said, sure, if you want to live under a bridge.
Yeah, something like that.
Yeah. So, okay. Yeah, I mean, look, I've talked about this before, that as talented and knowledgeable about the markets that the team is, to me, what's even more important are the ethics, and that everyone on the team cares about what happens to people not even all have to be in our community, that we're rooting for everyone. And you know what, Steve, I also think that some of those guys that are doing something like that would not bring in competitors to be interviewed to possibly lose a subscriber. So there are a lot of
Absolutely, that's a
things I
good
think
point.
that set us apart from whoever the guy is who probably lost some money and is angry at the world. But you know, anyway, the cream rises to the top. I don't, I'd be pretty surprised if people,
Yeah, and
looked at us
I
like
can
in
tell
that.
you from experience, and Blake is even better to to tell you that. Blake and I happen to you two friends, and Stelios, he was working like for a big bank for like more than a decade.
Yeah,
They've met some of the cream of the crop. You know what I mean?
yeah,
My uncle was one of the best forex traders in his age, and he wasn't working in Greece, of course. He was working abroad, like in big banks. Performances like those that you see demonstrated are fake 1,000%.
yeah,
1,000. I
yeah.
mean, you don't need to be a rocket scientist to understand that, right?
Well, I say, hedge fund managers do cartwheels doing 25% a year on their money.
Yeah, and I'm telling you, like
What's wrong with that? So
somebody
if you,
can even make like 50 or 60% if they're willing to take a big risk. But whenever you see like things, oh, I made 1,000,000 out of 10,000 within a year. No chance in a billion.
yeah, well, maybe in a billion.
Uh, Maybe, yeah.
Yeah. Anyway, so is our CEO here today, Blake?
I hope he
Yeah,
is.
just waiting for you guys
Shut up.
yeah, pretty much.
All right. Well, you're a
I
very
mean,
Good morning, Blake.
just
you're a
listening
very
to you guys go on and on and on and on and
you're a
on.
very patient man, Blake.
Dale
No,
and
you're
I,
really not, Blake. You're not that patient.
a lethal combination with a microphone.
Yeah, yeah. Okay, so see you tomorrow, Blake.
Yeah. How you guys doing?
Okay.
Good, mate. How was your weekend?
Good. It was good. Just
Weather's nice there now, isn't it, buddy?
define nice. I mean, it's still hot.
80? Oh, it's not in the 80s yet?
No, not
Oh,
yet.
okay.
Not
All
yet.
right. Halloween.
Not yet. So anyway, no, all's good. I'm just looking forward to this week. We got a busy week in the markets, and
Yeah.
I mean, we've got everything from obviously jobs data coming up.
Oh,
Can you
yeah.
guys see my charts?
Yeah.
Yeah. Okay. So we got jobs data this week. We've got the RBA tonight. We've got
It's a Blake Morrow kind of week. Lots of news events.
It's a lot. ADP on Wednesday. All the ISM numbers are coming out this week. So it's a real busy week. Today's kind of slow, but we do have the RBA tonight, so that might actually be a market mover. Even though the market's expecting the RBA to cut, really the risks I think are tilted to the upside if they're not as dovish, and we've seen that a lot as of late. The central bank will cut, the currency pair ends up, or the currency ends up rallying, following, just because they just weren't as dovish. Oh, here goes the euro. Euro finally did it. So the euro just busted through to 92, taking out all the stops. Just you guys just note that we expected this to happen. So here we are, just taking out all the stops below 109. And it's happening. Yeah. So we'll see if we'll see how much downside follow through we get through here. So
what do you think in 108.50? I think Andre had numbers around there.
I don't know. I don't know.
Any extensions or anything down there?
The extensions that you'll see that come in, they come in, and I'll redraw them right here. So
Blake, this is a shorter term chart, so you don't have it there, but we have the 78.6% fib, which I'm sure you have it on the daily. We have the 78.6% fib at 1081. That dates, back from the move that started higher years ago in 2016 until we found the high in 2018.
Yeah, I mean, if we're just doing a stop hunt right now, I mean, we might get down to the 70s, and then I don't know if I'd be chasing it down here. And just remember, if you go to the daily chart,
And when Greg was on, he just said, pass on the euro, but he was looking for, I believe, some weakness, Blake, to buy cable. Greg from last
well,
week.
he's gonna get it.
Yeah.
The pound's kind of falling, but we've got this head and shoulder pattern that should complete here. That's a 2-hour chart, which I do not want,
Okay.
but that's Paul Franco does that. The
Down
pound might
there?
extend to 122.30.
I think that was his range.
Huh?
I think that may have been his,
Probably.
buy entry.
That's quite possibly it, and so we'll see.
So,
We'll see what
if
the euro
people
does
sign
here.
up right now, they could go see what Greg is looking for a cable entry.
Yeah.
See, that's what we can do, and you should be
Yes,
able to
all
do
you have to
that
do
too.
is go over to ForexAnalytix, go to the pound, and look at where it says Elliott wave, which I'm not going to pull it up right now.
Okay.
But yeah, let's see. I want to see how the euro reacts here, because this is just a stop run. That's all this is. How far it extends down, I think it could extend to 77. I think it's quite possible, but we'll see. We'll see if we pop right back above 109 here in the next 10 minutes, then it's probably going to go back to 109.30, 109.40. That would be my assumption. So just be really careful chasing the euro down here. Like I said, I don't know if we're going to get all that a whole lot of follow through. The daily chart's still, big descending wedge here. Big descending wedge.
Still diverging.
Yeah, you can probably, argue that we just are pushing just slightly below it.
Yeah, throw
Again,
over.
Yeah, it could be a throw over. So let's just, let's see how we react here. I don't know if I get super excited about it just yet, but like I said, I'd like to see how it reacts down here. And it is euro. It's not just Eurocentric, because we do have the cable coming under some pressure. But I mean, the euro is what's bringing in all the dollar strength. One of the other currency pairs we were looking at earlier this morning would be the Swissy. Where's the Swissy?
Yeah, I got through 50.
Yeah, so it took out the 200-day moving average. We are challenging the underside of this broken trend line. We're getting to the 88% retracement, which comes in at 99.65. We made note of that with ForexAnalytix.
That could be a good shot.
Yeah, I mean, I would be really more focused on what's happening with the euro here, and seeing if the euro is indeed,
Would you prefer to get long euro rather than look to get short US dollar Swiss? Although Swiss is not making a new high and the euro is making a new low.
Well, the Swissy, the problem is the carry. So if you're short, if you're short the dollar Swiss,
you have to pay them to make you be wrong.
You have to make sure that you're really, really well positioned that day. So,
okay,
like if I was to short the dollar Swiss, like let's say I was to short it, which I'm not at this moment, but let's say I did.
Yeah.
And
it took a week to develop.
It would have to be like, it would have to close. I'd have to be up 30, 40 pips and say, I'm willing now. Now I'm willing to hold it because I had such good placement in price. So,
okay, got it.
Yeah, like I said, watch the euro here. If we get back above 109, I wouldn't want to be short. So, but the data has been weak. We just had German inflation data came in, slightly weaker than expected. I think that's probably the catalyst that finally, the straw that broke the camel's back, per se, that pushed us over the 109 level through the stops. But like I said, I don't know if I'd be super excited about it down here. It's one of those things that it broke, but it looks to me like a stop run at this moment. But we won't know that probably for like an hour or two, and seeing how it responds down here is going to be key. Because I've been looking at it down here. I've been looking at wanting to get long below 109. Just a little earlier in the chat room, I was like, okay, euro looks weak. Let's see if we can take out the stops below 109. We are now taking out the stops below 109. Now it's if you know, and I'm looking at it specifically for this. If we get back above 109, let's say we get back towards 109.10, then, you know, I might actually start playing it on the long side. If that's the case, you know, especially if we have an hourly or a 4-hour close back above 109, back above 109.10, I'd be happy with that. I'd be like willing to take a counter trend, you know, let's go the other direction and see if we can, you know, ride this up 30 or 40 pips. That would be my plan. But if you guys use you're not even using ForexAnalytix, but you read the blog, like, you know, I blogged about this on Thursday. So if you go to the blog, and I think the last chart was the euro dollar, and you can read it here. Looks to test the 109 level overnight, but traders should be aware of the longer term descending wedge. You know, yeah, I just map it all out, and it looks like the risks of a break lower, because everybody was calling a triple bottom. It looked like we're going to break lower because you had to get everybody out that was buying the euro at 109.60 on this. Everybody was buying it here, 1, 2, 3 triple bottom. So everybody that got long here, it should be getting stopped out right now. And so now that they're stopped out, you know, let's see if there's enough you know, enough momentum to carry it back in you know, back above 109. And it's questionable. It's questionable as of right now. Now, one of the other things that I know Steve wants to talk about, so I'm not going to talk in great length. I'm not even going to show you the chart because he was asked about precious metals in the chat room. But the one thing I do want to note is that we do have gold and we do have silver that's heavy today, so that could be weighing on, you know, the euro. It's got, you know, it's given the US dollar a little strength. At the same time, you can see the dollar yen. The dollar yen's actually trading stronger as well, and that mirrors you know, the move that you see in precious metals. So as precious metals move lower, you're going to have the dollar yen that's strengthening as well. I think the dollar yen is one of those currencies that, even though I've predominantly been pretty bearish, this is one of those that could really shock people. I think that, especially, you know, going into the next couple of weeks, if there's a U.S.-China trade deal, the dollar yen could unexpectedly break higher, and I think that is the risk. One of the reasons why I say that is, you know, you take the longer term move of the dollar yen. This is a daily chart. You know, this is extended out 6-7 years, or 5-6 years, excuse me. You know, we came down, broke below these lows, but it was a false breakout or breakdown, right? So you had this move right here. You had a false breakdown and a reversal. I think the risk might be for a move back up towards the 111 level in the dollar yen. Again, why would that happen? The reason why that would happen is because, you know, you have a US-China trade deal that is more than just a truce. That happens in the next couple of weeks. We will be trading at 110, and the market is very long yen right now. That's one of the things that you should also note, is the market is very long yen. So that means the market is expecting for a weaker dollar yen, and we have some good news between China US you know, trade talks next week, which will be on Thursday and Friday of next week. We'll get a reversal, and probably a fairly strong one. You know, could take us to 110, maybe even 111. So those are things that I think you should be thinking about, because right now, what I'm what's on my radar for this week is obviously the jobs data, you know, that comes out on Friday. All the economic data that we get this week with ISM, ADP, that's going to be pretty important all week long. And then next week, it's going to be China trade. And those events, especially on Friday of this week, and then Thursday and Friday of next week, that's what's going to drive price probably into the fall. So, and if you think about, just think about this for a moment, and you know, I'll let Steve and Stelios talk about this for a little bit, or they can bring in some comments. if we have a weak jobs number, like I'm expecting our employment picture to start to sour. Finally, it's been pretty strong, but I'm expecting it to start to sour. If it's not this month, it'll be next month. But let's just say, for argument's sake, employment data starts coming in a little weaker than expected. Okay, that's going to weaken the dollar. That in my opinion, it's going to immediately start weakening the dollar. Now, if you put together a China-U.S. trade deal in 2 weeks, one of the reasons why the U.S. dollar is so strong is because of the tensions between China and U.S. If that's going to ease, or if it looks like it's going to ease, the dollar will weaken again. So if like, let's say we have a weak jobs report and we get a China-U.S. trade deal in the next 2 weeks, you could quite possibly see, the dollar yen reverse back towards 106. You could see the euro dollar push back towards 110, 111. I think that those are all risks in the market. So, and it may not even be dollar yen. If it's China, the dollar yen might actually make it to 109, 110, but we could see the euro dollar back at 110, 111. So those are things that I'm thinking about moving forward. Today's price action is all about, just pushing the stops. But where we go by the end of the week, it's going to all be driven by data predominantly. So with that being said, still, hey, Steve.
One of the things, Blake, that Gregor keeps repeating all the time, he said it last week as well, is that he does not trust at all Monday's price action. And he's very right about that.
Yeah. I mean, Monday could get
very
faded.
Often, that very often you see moves that are faded next day, or moves that are in the opposite direction of what you see for the rest of the week. So this might be the case, indeed.
Yeah, I kind of look at Mondays as follow-through days to the week we had prior. So the euro closed on kind of a weak note, and we got follow-through today, and yeah, Tuesday, Wednesday, Thursday, maybe. And you know what, Blake? I've seen a lot of turning points, inflection points in the Dixie and the dollar on the NFP that last for more than a day. I mean, for weeks. So that could be the day.
Yeah, we'll see. We'll see. It might be it, but like I said, it's all about the euro and where we go from here. And in the next hour or two, if we're back above 109 and change, I wouldn't want to be short. I mean, that's just bottom line. But all right. Well, Steve, how you doing today?
Good, Blake. Good.
I heard Stelios earlier.
Good morning.
I don't know
I'm
if
here too.
Hey, Stel, how you doing?
I'm very well. Can I just say, Sean, that was actually very funny what he wrote. But anyway,
I did
not see.
You have to check it.
All is good. I agree with what you're saying, Blake, regarding the dollar. The more there is this uncertainty on where it's going to go with China, the more dollar is going to be a safe haven flow. And like somebody wrote on Twitter today, the dollar is the healthiest horse in the abattoir. But we're still in the abattoir, right? They're all going to get killed. Anyway, and also Jane says, our friend Jane says, do you really think a trade deal will be met other than buying soybeans and pork in 2 weeks when Brexit has taken over 2 years? Yes, Brexit is much more complicated though, right? Trade deal is only one part of the whole Brexit saga. And all we need really is for an initial agreement between the Americans and Chinese, and then everything is going to get slowly sorted. But it should be easier to come to a trade agreement between the US and China for sure. Yeah. So okay, thank you, Blake. And,
I'm gonna pass it over to you guys. You guys, hey, remember today is the last day to take advantage of the ForexAnalytix offer. We are reverting back. So if you guys have not, taken advantage of it, please do join our community, be in our chat rooms. That's where I'm going to be at here in the next 15 minutes. And you guys have a great one.
Thanks, Blake. You too.
Thanks,
buddy.
everybody.
Thanks, Blake.
Thank you, Blake.
Okay.
Stelio, and of course,
yes.
one more thing. I mean, it's getting a US-Chinese trade deal can be extremely easy if the criteria are set too low, right?
Yeah,
so
absolutely.
It all has to do with what kind of a deal are you willing to take. So if you lower the criteria, then it can be very, very easy to achieve. If not, it can be a pain, obviously, right?
Yes. Okay. So what else did we have? What else do we have to do? Okay,
Canadian
we had some
producer prices. I think we just got that.
that was
0.2.
minor. Yeah.
Yeah, minor. Just saying. Yeah.
Yeah. So we had some minor data out of Germany. Actually, UK GDP came in line at minus 0.2%, so unrevised. And we get one more, we get a technical recession, but year on year is still showing around 1.3 or something like that, if I recall. So the UK is struggling, but remember, all the uncertainty at the moment is keeping investments down. It's really not a good environment at the moment. German CPI came in line. I mean, there wasn't that much happening. The only thing I want to stress is we had the Saudi Crown Prince, MBS. I don't want to say the whole name, it's too complicated. He warned that a war between Saudis and Iran would lead to a total collapse of the global economy. And he warned that they would send oil prices to levels unseen before. Obviously, it suits Saudis to have high oil prices, but really that's something.
Why do you say that?
Yeah, exactly.
Was that on 60 Minutes during his interview?
I don't know.
He was
actually
interviewed on that. Okay.
Was he? Okay, maybe that was it. Yeah.
Okay, I didn't watch it.
So for me, apart from the US-China thing that's happening, I think tensions in the Middle East is the most important thing right now, and we have to not
ignore it.
Not ignore it. Yeah, I mean it's a big issue. I think there's a lot of people.
Needless to say, Stelio, I'm pretty sure that Trump is going to be very, very sensitive about the price of oil, because think about it. The only excuse, I mean, it's a lousy, stupid, and dangerous excuse, but regardless, that central banks have been using to ease their monetary policy further for the time being is inflation. Okay, that we don't have enough of inflation, like inflation is a good thing and you should be striving to get more. Anyhow, not to open this conversation again. So imagine if something happens and crude skyrockets to 80, 90, 100 or whatever.
Handcuffs the Fed.
Yeah, exactly. So then they have to make a decision. They either have to openly admit that they're not targeting inflation anymore, which we know they're not doing. So why do we know? Because in order for them not to appear that they're doing what they're doing, which is ignoring inflation in favor of asset prices, etc., they've kept moving the goalposts having to do with what kind of inflation the target they have. Plus,
and moving the calculation as well.
And exactly. Plus, changing the calculation and again through hedonic adjustments and all that BS to show less inflation than what we actually have in the system. So imagine what's going to happen if crude messes up completely this approach, and they're forced to acknowledge that, oh yeah, we have 3% inflation, but it's okay for a limited amount of time. But then everybody realizes what's at play. And if the markets actually acknowledge, and the average investor acknowledges that central banks are actually willing to let inflation run, imagine what's going to happen with bonds. We're going to have a massacre there sooner or later. So crude prices are super critical for the monetary easing plan to go forward, right?
Yep, absolutely. And I do agree about the next bond move, by the way. Okay, that's it really. Otherwise, a very quiet weekend, really, and nothing to note.
Yeah, let's see what we get during the week. Anyhow, we've started in a positive note, in the sense we see some moves that might lead to some breakouts. Specifically, besides the fact that we are at new lows in Euro USD, as Blake was showing, testing the descending wedges support once again. Look at the DXY, which of course is doing more or less the opposite. Look at the DXY, which is currently trading as we speak at highs we haven't seen since May 2017. Okay, and let's see how we're going to close the day, because don't forget we have this blue ascending channel, which the market has been respecting since the end of 2018. And if we do close today above it, that's definitely going to be also a technical breakout that the market is going to notice, and probably not one that you should be fading. But as Blake said, it all depends. Let's see how the next few hours, up until tomorrow, let's say, because we might have like a complete retracement on Tuesday. But if we see a couple of days staying below those levels in the Euro USD and above those levels in the DXY, I think you should seriously take into account that as a major technical development in the FX environment in general. Now, having to do with some other majors, keep in mind that cable has produced this breakdown from that confluence of resistances up there. Looking forward to seeing how it's going to respond from this 122.70 area. 122.70 is the 50 DMA and the 50% fib, so both are there. But I have to admit, it looks heavy from here. Aussie coiling near the lows, but not at new lows. So, another day of divergence with the Kiwi. Keep in mind, we have RBA today, so everything can change having to do with Aussie, and, accordingly to anything that includes Aussie. For example, keep in mind, Aussie Kiwi got initially rejected from that nice confluence of resistances, moving higher, but it can easily produce another leg lower later today. Depends on what they do. I mean, if for some reason they don't cut, I'm pretty certain Aussie is going to fly, and along with it any cross rate that includes it. In that case, Aussie against the USD should begin another leg to the upside, in essence creating a nice divergence with what Kiwi has been doing. Kiwi just a few hours ago was trading at a new low. I mean, you have to go back to 2015 to find lows, equivalent levels. So we're talking about like 4-year lows. So obviously they're still diverging. Now it remains to be seen if the Aussie is going to follow to new lows tonight, or if it's going to keep diverging, in which case I think that Kiwi will probably at some point also reverse higher and play out to this divergence. Regardless, as we've said many times, 64.25 is a key resistance for the Kiwi, and as long as we trade below it, irrespective of how many divergences we see, for example, here in the RSI or between Kiwi and the Aussie, you should keep respecting the downside. Next downside target, 61.50, the 161.8% extension. I think it's worth monitoring that. Now let me have a look at your questions, by the way, because we have quite a lot of people writing in. Shocking to hear about ICT. Yep. Not really shocking, to be honest, but I mean, yeah, and not an exception. Hi, Blake. Kiwi yen. Yeah, we can have a look at both the Aussie yen and the Kiwi yen since you asked for it. Let me see what else we have. Swiss, it's a safe haven, and with volatility being at the risk on mode, it could continue to rally higher. Definitely huge divergence between USD Swiss and Euro USD. I mean, Euro USD is trading at multi-year lows. USD Swiss is far away from the recent highs. So another type of divergence like Aussie Kiwi, as we were talking about, but a much bigger one. Do you really think a trade deal will be met other than buying soybeans and pork? No, Jane, let me answer this question very clearly. I think it's going to be extremely hard to produce a trade deal that's going to have substance for the US. If Trump is forced to produce quickly a trade deal, he's going to try to present it like the new NAFTA, he was accusing NAFTA of being one of the worst deals ever. He revamped it. I mean, back then I actually went down and read plenty of articles, with bullet points of what the changes are. Trust me, I mean, the changes were less than 10%. Insignificant changes. I mean, very minor changes. And then he presented it as like the best deal ever. So, he's going to do something like that if he's forced to produce for XYZ reason a US-Chinese trade deal. He's going to do more or less the same. I mean, they're going to have like minor changes, and he's going to present it like it's something huge, something like groundbreaking. Steve, you don't know how to think crazy. To Trump, higher oil will be great because the US now produces most of it. Note, I don't agree with that though. Yeah, but you know how it is, Ziggy. I mean, somebody can make an argument of who is the marginal producer now. So how much of an effect Middle East trouble is going to have, but I'm pretty sure it's going to have big effect to the crude prices. Okay, and one way or another, the US is still importing crude. First of all, second of all, don't forget that crude. I know you're not forgetting. I'm just mentioning it. Crude is something used in the production of movement of like the vast majority of the items. So higher crude prices, one way or another, is definitely going to spill over to the CPI readings. Definitely. If I expect nat gas to go around 228 to 30, I haven't checked that in some time. We can check it together. Let me start by covering Aussie yen and Kiwi yen, and we're going to go there. So Aussie yen, one more day of consolidation on top of this horizontal support resistance area at 72.50. So, so far this consolidation is definitely not inspiring in the sense, I mean, this is the type of consolidation that you expect to break in the direction of the previous move, which in this case was lower. Of course, anything can happen since we're on top of support, but I have to tell you, it doesn't look good. So from a technical perspective, if we didn't have the RBA today, I would say that, this looks like a good opportunity to be short for another leg lower. And if you have a look at the Kiwi yen, which is not going to be affected by the RBA today, obviously, I mean, it might, but in a minor way, you see more or less the same deal. I mean, look at this price action. It looks like a little bear flag developing after this leg lower. So both of them look like they want to continue lower. Okay, now, besides the obvious, which I've mentioned multiple times, we have the RBA today, so it can move anything that has to do with the Aussie quite significantly. There's no question about it. Having to do with the Kiwi, now with the Kiwi yen specifically, keep in mind that we have this nice descending channel that the market has been respecting for quite some time, and support is not far away. We also have this previous low at 66.30. Bottom line, I don't know how big any follow through to the downside can be, because we're going to be entering an area of support. So that is something else to notice. Regardless, in the short term, it looks like Kiwi yen wants to continue lower. At least that's what the price action tells us, and the same thing applies to the Aussie yen. Now, we had questions about almost everything that involves precious metals, so I'm going to have a look at that as well. But you asked about nat gas. Remind me, what's the ticker we've been looking at? NGAS. Yeah, NGAS. Yeah, okay. So we haven't had a look at that in quite some time. You can see it from where the drawings and here. So let's extend this horizontal zone that we had, and let's see what has been happening. Okay, anyhow, back then, because this is where we were looking at it last time, probably in February, because I see where I drew, the lines. We said back then, that we were at a major support area, and, whatever happened had to happen from there. We had an initial rebound from what we see, but eventually we broke lower. We produced some follow through, not a bad one. I mean, we came very, very close to $2. Then we had quite a nice rebound, and now we seem to be failing once again. So let's do some analysis here and see what to expect. So first of all, this move looks like it could have been channeled. And why do we care? Post-mortem, post-fact. In this case, since we don't have anybody, we care because we might see that channel acting as support if retested, right? So that's one factor to consider. Also, let's feed this. Okay, so we're going past the 50% fib, 61.8 at 229. Now, we had the lows at 160. Keep in mind that I've talked about that in the past. Keep in mind that when we see the distribution of prices in anything that's physical, because this is a physical commodity, right? This is something that people use. This is something, this is not a stock company. This is not something that can ever go to zero, right? I mean, it's not a stock of a company that can go broke tomorrow and price going literally to zero. This is a physical thing that has usage in real life. That means that there is something going for you the lower the price goes. We know very well that the distribution of prices in physical commodities is nothing like a normal distribution, because you always have fat tails to the right-hand side, which means that you can frequently see events that will create abnormally high prices, but it is, you know, extremely unlikely when you're trading near the lows to see, you know, some kind of a huge event that will take prices, let's say, at 80 cents. Because, you know, it's still something that has costs to produce, distribute, etc. Meaning very, very low prices, like close to $2, give you, you know, quite a nice risk-reward ratio. Now, I think that at the very least, we might produce one more leg higher from here to at least get a more proper corrective move to this whole move from the spike high to 490 down to almost $2. So I think that, you know, attempts to buy the 61.8 or even the 78.6 and the retest of that descending channel might be worth a shot. That's what I think, especially considering that, you know, and natural gas prices are somewhat correlated to crude, obviously, and at any given point we might get some, you know, geopolitical event that will lead to a big spike higher. So that's what I think about natural gas. Now, precious metals. So let's take them one by one. Beginning from palladium. If you remember, I made it quite clear that once we went past the 1600 level, and when we were retracing back in this corrective manner, after having triggered this cup and handle formation, that, you know, that implied much higher targets. And, you know, there we are. I mean, earlier today, we traded fractionally above 1700, which is like $100 higher within a few days. So there is no question about it. Palladium remains very, very well bid. The implied target of this cup and handle formation is quite higher. If I remember right, it's like 1930, 1950, somewhere there. The 161.8% extension of this corrective move is lower at 1830. Anyhow, bottom line, palladium remains, you know, very, very bullish. And that's the technical fact as long as we trade above 1600. Now, having to do with gold and silver. First of all, gold about to trigger on a daily close below here a head and shoulders formation pattern. You can see it here. I mean, if we ignore the short-term formations like triangles and things like that, it's not very hard to see. There we go. Shoulder, head, shoulder, neckline, something like this, a little bit lower. Okay, so that would imply a move towards 1420. I would say. I don't even care to measure the objective because I like this area. It might be a little bit shorter than the head and shoulders formation objective, but that's quite a good area. If you zoom out, you will find out why. So gold in the precipice of a breakdown, which will point to a much deeper correction, while silver is leading, right? I mean, we saw one leg lower, a nice rebound, another leg lower, which would target levels close to 16.5. So I see no real reason why we can't make it there. 16.5 is also more or less where you find this broken trend line resistance that might act in this case as support. So I do think that the path of least resistance for those two metals remains the downside. Now, having to do with, because we have that question as well, having to do with the gold-silver ratio, remains to be seen what kind of a move we have here in the gold-silver ratio. Is it the beginning? Are we in the beginning of another like very bullish move towards 100? So the move lower is already done and over, and it was this corrective move lower, or is this a corrective rebound? We're going to find out quite soon, because if the latter is the case, I wouldn't want to see levels higher than 88. So 88 ounces of silver for 1 ounce of gold. Okay, I think that is quite a critical area that will tell us what's the case here with the gold-silver ratio. And one more, which is platinum. Platinum actually is the one that indicated better than any of the metals the failure up there. Why? Because platinum actually had a one-day false break higher from this multi-year. You can see it. I have to zoom and zoom and zoom, but you can see this multi-year trend line, right? So I was monitoring very closely this trend line. We only broke above it for 1 day. Usually, false breaks like that one are very good indicators that you might get the exact opposite move. So platinum actually was one of the metals that indicated that something might be about to break in the rally that we had. Now, if we want to have a discussion about the direction, the longer term direction of the metals, I think it's higher, right? But we have an ongoing corrective move, and we need to respect that. The last monetary policy, the RBA, they said they were keeping an eye on the labor market, and after having seen the unemployment rate increasing from 5.2 to 5.3, the RBA might ease the rate tonight. Yep, that's the case exactly. Patrick says dollar index, the bonds are inverted. There will still be rate cut in the next Fed meeting. Powell keeps on jawboning. The dot plot also indicates that the Fed were cutting rates up to 1.5 in 2020. Yeah, I can tell you one thing for sure, and you should never say that in trading, but I'm going to say it now. I'm absolutely certain that the dot plot is completely wrong. not only for the reason because it has been in the vast majority of the cases wrong over and over and over again for years, but for the very simple reason that whoever believes that the Fed is going to slowly ease for another, let's say, 15 months, and everything is going to be fine, I think is living in dreamland. I believe that by the end of 2020, since you mentioned what the dot plots say by then, we're either going to be more or less where we are or higher, in my opinion, very, very little chance, or we're going to be back at zero. So I view this more or less as a binary event. Okay, that's my point of view. And as I said, the vast majority of the chances we're going to be at zero. So I'm pretty sure that the dot plot is wrong, one way or another. Okay. So let's see if we have any thoughts on USD ZAR. Yeah, absolutely. We can cover that. Let's see. USD MXN, by the way, a nice healthy rebound from the 61.8. But keep in mind, because I see a lot of people trading the USD MXN, Blake does that successfully in the short term. Personally, it's not my cup of tea. It's not my cup of tea in the sense I find no reason with my trading style why I should be trading, something that is coiling in a multi-year symmetrical triangle. You can see it here. I mean, this triangle dates back to 2016, but I will be very, very much willing to trade this once it breaks out. Okay, regardless, while still bounded, within the confines of the symmetrical triangle, nice reaction from the 61.8. Just mentioning, since I was looking at it earlier as I did the USD ZAR. Now, having to do with the USD ZAR, you can see here that, first of all, we have to accept that we've been in an uptrend since early 2018. Why is that? And why isn't it debatable? Simply because since then, we have a series of higher lows, right? Basic definition of an uptrend, right? You can see it here. And perhaps one more here, right? There you go. So I know that it hasn't been doing much lately. I mean, somebody can see this as a large range, but if you zoom a little bit more, you can see that at least since February 2018, we've been in an uptrend. So that probably means that you need to respect the possibility, which is a distant possibility, to come up, retest once again this 15.5 area, and this time actually continue higher, right? You can even make the claim that this is an ugly looking cup and handle formation. I have to admit, an ugly looking, like cup, and now we've been creating the handle. So I see no reason why somebody would want to be short other than looking at lower time frames. I'm giving you the big picture here, okay? And especially, you don't want to be short if we close above 1550 on the daily, because I'm pretty sure that that's going to take us to the next upside objective, the 78.6, quite fast. Yaz asks for more or less everything that is cable related. Pound USD, we already saw that, and we're very limited on time now. Pound Aussie, pound Kiwi. Let's have a brief look at pound Aussie, pound Kiwi, and I'm assuming, Coach, that your guest is here.
If you are here, Peter Goldstein, please send me a message. I'm hoping you're not the phone call-in listener. If you are, you need to hang up and log in with your desktop or laptop, because I can't make you a presenter if you're a call-in listener. I've been trying.
Are you sure about that, Coach?
Oh, I'm not sure.
The reason I'm asking if you're sure is, let me see, because they keep
changing it.
They keep up making updates. Perhaps you know.
Okay. Well, Peter, are you here?
You're probably right though, because I see it in the list, one phone call listener, and there's nothing I can do. I mean, I can't right click on it and somehow promote him. So yeah, if he's listening in through phone,
he's got to hang up and log in on his computer with a microphone.
Yes, that is correct.
So if you're listening in, that's it, Peter.
Yes.
So right now, I would say we don't have a guest.
It's extremely likely he's the one listening into phone. Yeah, extremely likely. So see if you can communicate with him, and you know, I can cover questions. Okay, so Pound Aussie, big picture. Pound Aussie is trading since 1.5 years ago within an expanding triangle. You can see it here. Now, already having said in a sense that we have no trend, because that's the case, keep in mind that we have been rejected from that confluence of resistances and this channel of resistance a few days ago, and we're in the middle of the channel. So if we do break below this channel support at 180, you know, we can easily extend lower, still remaining within this larger range. So I would expect lower prices in that case. I drew that several days ago before we even got rejected, what you see here. Now, if we find support here, because we are sitting on a support area, another move towards 186 is very likely. But as you see, there is no real trend. More or less the same case with the pound Kiwi, not exactly the same case, but equivalent. We've been rebounding within an ascending channel, but this within the boundaries of this long-term ascending channel, this larger ascending channel. You can see it here drawn in purple. So, you know, same deal here. I mean, we're close to support. Risk reward ratio in the short term would favor long positions, but pay attention to 194, because if we do break below 194, I would expect more weakness, and we do have the space to move lower before we reach the ascending channel support once again. Okay, so that's my viewpoint on Pound Aussie and Pound Kiwi. Let me see if we have more questions.
Someone wants you to look at S&Ps.
So open market system operation, does it mean that the Fed is pumping money in the circulation now, since, well, the consumer spending started to show that the economy is going into a bad economy? So when bond markets are actually inverted, will the rate reset back to zero? Yeah, first of all, the Fed manipulates, heavily manipulates, the central banks in general heavily manipulate the rates. At some point, they will have to reset to what they need to be. Now, having to do with open market circulation doesn't work exactly like that. The Fed cannot create outright money. What they can do is that they can create reserves for the banks to exchange reserves with bonds. So then the banks can use the reserves to expand the money in circulation, because the Fed does not create money, the banks do. But it's just the mechanism, because in essence, it's, you know, in essence, the essence is what you're saying. The mechanism is a little bit different in all actuality, okay? But yeah, in essence, we are quickly headed back to quantitative easing. Now, keep in mind, from what I've been reading, they don't want to name it anymore quantitative easing, as they didn't want to name quantitative easing what it initially was, which was and is debt monetization. The reason they don't want to do that is, first of all, they're not allowed to monetize debt. I remind you that Bernanke had to go in front of Congress and tell them that no, what we're doing is not debt monetization. This is like, you know, short-term actions for an economy that is in distress. And, you know, once we get out of the tough situation, we will sell back the bonds in the market, because, of course, you know, we don't want to go into debt monetization.
He didn't say in 10 years we would start doing that.
Yeah, of course not. He said, soon.
Yeah.
So 10 years later, they want to start quantitative easing again, but this time they don't want to name it quantitative easing, because as debt monetization had a stigma, now quantitative easing had a stigma. Why? Because they proclaimed that quantitative easing was emergency measures for an economy that was in deep shit. The worst kind
Ooh,
of, the worst kind of
bad word.
yeah, the worst kind of economic crisis the US had experienced since the Great Depression in 1929 and the 30s.
Oh,
So
let me tell
now-
you, I had to walk around with cardboard in my shoes when I had a hole in my shoe, and I walked 20 miles to school.
So
in
for
the
obvious
snow.
reasons, since the wording quantitative easing was combined with a very, very weak, struggling economy, the worst financial crisis since 1929, they now want to do the same thing, but they want to wrap it up differently. They want to give it a different name in this case. Regardless, it is the proof of what I had been saying forever, that quantitative easing cannot succeed, because the only way, of course, they proclaimed success very early on, but you cannot say that the policy of quantitative easing was successful until you actually manage to take off all the extra money from the balance sheet. So in order for you to say quantitative easing was successful, was to prove that you can take the balance sheet to do the easy thing, which is taking the balance sheet of the Fed from 1 trillion to 4 trillion, 4.5 trillion as it happened, and then prove that you can take the balance sheet back to 1 trillion. What did they do? They managed to take down the balance sheet from like 4.5, not even 4.5, 4.3, 4.4 to 3.7, and they had to immediately stop what they were doing, and they're about to reverse course because the economy would fall apart. So I think if you need any more evidence that quantitative easing does not work to balance an ailing economy, that's it. I mean, they managed to offload a fraction of what they had to accumulate during the financial crisis, and probably wave 3 is starting now for those that know Elliott wave. I wouldn't be surprised if in 3 years from now, Fed's balance sheet is at $8 trillion.
Okay.
Coach?
Yeah, well, whoever called in hung up, didn't leave me a message.
Didn't, huh?
So,
okay.
No, so I guess I'll have to reschedule Peter. Peter's made some fantastic calls on turns in the market.
Oh, he has. I remember Peter. He's good in what he does. And
very good. So
please make sure that you reschedule, and
I
if
will.
him, tell him to be prepared.
Yeah. Dark Star. Maybe we could wrap it up. I wouldn't mind seeing your view. Dark Star, which is a song, Dark Star, or something like that. Want you to look at TLT, and tell me what you think. I was thinking maybe we'd get a C wave to the downside on TLT.
I'm not sure. Let me find the ticker, because I'm not sure.
Well, you could just type it in.
I'm not.
We get it.
We do have it. Yeah. Okay.
That's the most popular bond ETF.
I know, it's the 20-year one. Yeah. It's
Yeah.
20-year
See
one.
it there?
By the way, Coach.
Yeah.
Let's see. Yeah.
We either fail here or we blow to new highs.
Obviously, still in an uptrend, but I would pay close attention to this area.
Because I know you were talking about maybe reshorting bonds. You were stalking them last week or something, or treasuries.
Yeah, exactly. Yeah. But look at this area. Look where we found resistance.
Yeah.
At the TLT, right? Look at this.
Yeah.
Not only previous low here, but zoom out.
Yeah.
There you go.
Yeah.
You see.
So maybe the first break, that was pretty impulsive, don't you think?
High of 2016. So what I'm trying to say here is key area, because as long as we stay below it, I wouldn't be surprised to see another leg lower.
That's exactly the path I was thinking.
Yeah.
we must be kindred spirits,
We,
kindred
we're
charged
both
spirits,
we're
charged
both
spirits.
we're both Gemini, so you can look at it
Oh,
as
that's
as
right.
twins.
Yeah, yeah, we are. I'm the handsome twin.
I'm the young one.
Hold it. Yeah, I know. Okay. We're the only twins that were born 40 years apart.
Exactly.
Anyway, so I
Not
guess
40 years. Come on. In order for that to be 40 years, you would have to be 80 now, like 79 to be exact.
Tomorrow, if our guest shows up, should be interesting. It's going to be Francesca Riviola, who was one of the founders of FX Street. So I'm hoping Francesca
Nice.
makes it here. So he's got a very good handle on what's happening in the industry and what's happening with
It's a
FX
he.
Street. It's a he, yeah.
If it's a he, then it has to be Francesco, not Francesca. Francesca
Okay,
is the female version
I
of the
just
name.
call him Francesca, period.
Okay.
I don't
it's
think there's
Francesco,
a
then.
vowel. Oh, okay. Anyway, so everyone, last day, sign up, hang out with us, have a great Christmas, New Year's with us, or else, you know what? Just keep trying to get everything for free in your life. That's up to you, but you're going to pay the universal price for that when you are trying to move something to other people. They're going to want it for free from you. So anyway, that's what I've discovered. If you're a mooch, people will mooch you. So besides being a mooch, don't forget to don't just count your pips, mooch. Count your blessings. And if you count your blessings, you don't worry about spending money because you believe in abundance rather than scarcity. And I know the difference because I've lived from both places. So that's a wrap. We'll see everyone for Turnaround Tuesday. Maybe we finish off this dollar rally this high. I think that I could smell it. Okay. And I'm thinking it's around 99.90, 99.80. Maybe we get 100 print, but I'm sitting on my hands until we get there. And as Tom Petty said, the waiting is the hardest part. So everyone have a great day. And Steve, thank you for a great review. And
Thank you, Coach.
see everyone tomorrow. Enjoy the rest of your day. And adios from your team that is trying to help you every day. And we lay it all on the field, just like the Chicago Bears defense did yesterday. Adios.